everyone. Okay, this one today is multi-time frame analysis, also known as MTFA. Now, this one is something I think, I'm an old style trader, I'm from the days of the pits. This is something that we were taught. This was something that was engraved in our brain that a lot of traders I notice today don't do. And for me, I don't know why. I don't know why they don't do it. However, I think it's important because you need to know levels at different times. So we're going to get into this. So this is multi-time frame analysis. So as always, guys, pause the video. Make sure you read the risk disclaimer. It's important. If you're reading from the PDF, make sure you please take note of the risk disclaimer. It is important for us that you read this. So, MTFA, multiple time frame analysis. Most people know about the different styles of analysis. These can be fundamental, sentiment, or technical. However, most traders miss a very important style, which is multiple time frame analysis. I am sure most people in the early days have used this style. Yes, I'm from the early days, I've used this style. But as they progress onto patterns, trends, structure, and other styles of technical analysis, this is simple but effective style gets left behind. I don't know why. It's a strange one. When people start to specialise as a momentum trader, day trader, or intraday trader, or even a breakout trader, they clearly miss key levels of structure and miss the larger trend. People will also miss very high probability entry and stop levels as they zone in on the time frame that they're trading on. And I tell people all the time this. I have been saying, look at the bigger picture, read between the lines over and over again. If you're missing, you've got to remember, like I said in previous videos, this is like the Matrix. After a while, you will look at a chart and you'll read from left to right and you will see patterns and things emerging. The drawing tools and the indicators are there to help you gauge your understanding and that gut feeling that you get in making that decision. If we all knew where that chart was going to go, I don't care if you're Warren Buffett, I don't care if you're the best trader in the world, nobody knows if the stock's going up or going down. What we do is we read from historical patterns, we read the fundamentals, and we do the analysis that we can do to get as much information as we can about the asset we are about to trade. That's all we can do, and hope that more often than not, with a very good risk versus reward and trading plan in place, that we can make a steady, profitable income from trading. So what does MTFA analysis mean? So in Forex, it means monitoring the same currency pair in different frequencies, or also known different time frames. And I'll show you how to do this in a chart, so stay with me. Also known as compressions. To you and me, this means certain time frames. I'm going to call it TF, so if you're not aware, that's what I'm referring to. For example, when I trade patterns, I look at a 1 hour time frame with a 4 hour direction and a 15-minute time frame entry. Okay, don't worry, we'll show you. As you get more into your style of trading, these TFs will be edited to suit your plan. Using 3 different TFs is usually good enough to have a wide angle view of the market. Using less than this, or even one time frame alone, will not give you enough information to trade, which then means your analysis on one certain time frame can be irrelevant. When using 3 TFs, it's very easy to remember the general rule of thumb, which is the rule of 4. So for my example, I trade from a 1 hour chart, I look for a 4 hour direction, and I look for a 15-minute time frame entry. So there's 4. So decide what type of trader you are and work out from there how to look at these. Longer term frames. When doing longer term trades, it is best to look at the longer term TFs and work back down to other frequencies. For example, again, in my example, the 4 hour will give my trend a major structure. Remember, the term we have has all been beaten into us. The trend is our friend. I've said that many times. We do not execute on this broader chart, but we look for clues as to what the market is doing. But we use it for clues. For example, if we were to be trading a Gartley pattern and it was bullish, we would want the trend on the 4 hour to also be bullish, hence making the trade more favourable. This doesn't mean that we couldn't take a bearish Gartley if we only wanted to trade the pullback, as there may be room for a larger time frame for this move to happen. In FX, we look at the daily, weekly, monthly fundamentals tend to have a substantial impact on direction. Thus, when we trade FX pairs, we need to understand the overall direction of a market. medium time frames. When you look at this, you will look at the smaller moves within the broader trend, as they will become more recognizable. This is the most flexible of the three frequencies due to the fact that they sense of both longer term and shorter term time frames acquired at this level. Like we have previously stated, the anticipated holding period for an average trade should determine this anchor for the time frame range. Please, if you're reading this and you're hearing this for the first time, I will make sure it makes sense in a second, okay? This is the level we look at planning our trade. And again, using my example, it will be the hour. This is where I look for patterns and I look for structure. Does it match a higher time frame structure? Does it have a fib confluence? Does the pattern complete in the right level? Does the candle pattern suit my entry style? And then we look at the short term, your trigger. Certain trades should be formed on smaller time frames. This is because the smaller fluctuations in this range will give you a clear picture of the better entry point. This will be because you already know our structure and direction from what we're looking at other time frames. By the time we get to this point, this is giving us more confidence in our entry point or our trade. The short-term frame will show larger areas of volatility to those indicators which dub the markets as moving. The more aggressive the smaller time frames seem to be, the more overall reactions will seem to be large. But when you zoom out, you'll see that this is what it's like called static. Most of these moves are short-lived and they offer no real direction and are invalid moves. However, if you have conducted your long and medium frames correctly, you will understand this and not make poor decisions on what some new experienced traders have dubbed the start of a move. So in conclusion, and we're going to show you this on the chart, I'm going to show you what I do as a multi-time frame analysis. When you add these frames together, you can seriously enhance your chances of success. This will make your analysis easier to follow as you have time frame confluence. This will make you a more profitable trader. This will give you more confidence in your trade and entry, as you can see all TFs lining up, which would in turn give you a greater chance of success. It amazes me that in this day and age, people still look at 1 and 5 minute charts. Remember, the smaller the time frame, the higher the risk, which offer no real clue to market direction, as no bank or institution would even drop the 1 hour time frame, let alone a matter of minutes. This offers multiple opportunities for the trend follower, day trader, scalper and reversal or swing trader. Something that we've all learned from our binary days has been left in the bottom of the toolbox and needs to be dragged out, cleaned off and used again. The chances of success are enhanced as you will identify better entries and place better stops in the market for an overall. Okay, so let me switch to the charts. Okay, here we have GBP USD on 1 hour. Now, I can see what's going on here, okay? I could shorten this to a 15-minute trade. We can read the price, but I want to know, where's my levels? What are we doing support and resistance wise? So what I'm going to do is, if I'm going to trade, say I'm going to enter on my 15 minutes. So let me just switch to a 15-minute chart, for example, and bring this back up. Let's get this where we need it. Okay, so let's say we're looking for an entry on a 15-minute. Now, on a 15-minute, we can see that there is a big trend on this GBP USD. We've got a big trend in a downward momentum. Now we're getting some sort of a bit of a consolidation appearing here on the 15 minutes, but we don't know our levels. We don't know where the support and resistance levels are. We don't know what's going on. So what I would tend to do is I will switch back to, let's go to a 4 hour. I could even go to a daily. I'm going to go to a 4 hour chart. Now I'm going to plot. I'm going to get my horizontal, and now I'm going to plot some support and resistance. So I'm going to zoom out of my chart like this, and I'm now going to plot the strong support and resistance levels by using my horizontal tool. I've already plotted a couple. I'm just going to plot a couple more. Up here we can see that is a nice resistance level there. We can see resistance level, so we've got another one here that we can just move up. That's a really strong one to that level there, maybe about there. Looks good, because we've got, it was resistance, we can see that it was support there. We've got a really strong 10 there. So now we've got ourselves a bit of an indication of what's going on in the market. Now I could open up a second chart here, but what I'm going to do is, let me just come out of that. I'm now going to go down to the 4 hour. Okay, now I've got those lines plotted in. I just want to bring this chart down a little bit. And now on the 4 hour, I'm going to have a look at what we've got support and resistance. Let me just put that back in. I'm going to have a look at what we got support and resistance lines on here. So looking at this one here, we've got a couple appearing here and here. So let's get our horizontal line. And what we could do is we can change the color of this horizontal line to show that it's on a 4 hour, for example. So we can see that this is a strong line here. Let's just change the color so we know it's on a 4 hour, for example. So we'll say that's a 4 hour. We can use our notebook to write that down. We know that that's a strong level there. We could find another one there on the 4 hour. We got one there. Have we got anything there? Yeah, we do have a strong one there. So there we are, and we've plotted because we got a bounce there, we got a bounce there. It was also a resistance level. So now we've got our daily charted in, and now we've got our 4 hour. So when we switch to our what we're going to trade, so let's say we're going to trade at 15 minutes, guess what we've now got? We now have an indication. We don't need to worry about the ones that go off the screen because they're on a daily, so we don't need to worry about that. We come back in, now we've got some levels. So we've gone from the higher time frames, we've come back down, and we can see, you know, when you're looking and you're thinking, why does that change direction here? Why did that change direction there? Why did that, you know, so you've got an indication of what's going on in different levels of time frames. So now when you come to make your decisions in your trading, okay, when we zoom in here, for example, and we go into our live price and we just make that look a bit more how we want it, we can see here's our 4 hour level, here's our daily level. You know, we haven't got to worry too much about all that. We can see what's going on here. We know that we're hitting a really low level, so we can see by charting higher time frames and using fundamentals, and we could even go up to higher time frames and do some patterns, you know, do some charting. And then as we work back down to our 15 minutes of our point of entry, we can use those higher bits of information to judge on how powerful a trend particularly is, and also the direction of each market. I hope that makes sense. Take care, and I shall see you in the next one.